how do I simplify my financial life as I build a life abroad, right? And if you are looking at your life and you're like, I have no family in the US, and again, I have a strong Swiss or European passport, why do I still have this US passport? Because I essentially, and I'm wearing handcuffs financially.
Welcome to Swiss Money Secrets, your go-to podcast for insights on offshore investing and banking from the trusted Swiss perspective. Let's get into it.
We are excited to be back here on the Swiss Money Secrets podcast, joined by a wonderful guest. We're excited to have Arielle Tucker with us of Connected Financial Planning. We're excited to get into today's topic, talking about citizenship renunciation, particularly for Americans. Before we jump into that, Arielle, we always talk about something that's going on in Switzerland, interesting news. So for this week, we have two kind of interesting pieces of news, totally unrelated. Donald Trump will be coming, President of the United States will be coming to Switzerland for the World Economic Forum. Jamie, do you have any thoughts on that before we get to our little second news clip?
Well, I think Switzerland is such a small country that every time a US president visits, that's like a special day for us, I guess. Last time he has been at the World Economic Forum in person was in 2018. And the little fun fact is that we have our office very close to the airport. So when I was working, I saw Air Force One leave through my office window. And that was one of the more spectacular sights that I got to see. And I took some photos. So maybe I will see Air Force One again in a few months. Who knows?
Arielle, did you see Air Force One?
I did not, no.
I didn't either. But it was funny to see the activity. I live close to a military airport in Zurich. And it was interesting to see during that time just the activity, that the uptick in that, right? I mean, with the U.S. president, there comes a lot of security. And so it was funny to see how much of a buzz it created. And I've had the fortunate event of meeting other prime ministers or presidents of other countries through my rugby days. And I always expected to get a similar type of like security going on or activity. And it was never that case. So it's always something that, for me, even as an American, is interesting to see how that kind of, how it changes the I guess the energy of the space where they contact.
Yeah, it's very funny because presidents here in Switzerland like sometimes take the bicycle to work, and if you're like elected into national parliament, you get like a free public transport ticket so you can get to the national parliament easily. So yeah, different levels of security and excitement, I guess.
Yeah, I mean, we've even had presidents of Switzerland come in and out of the office building where we work, and it's just like walking past someone on the street. It's super interesting. So the other little tiny news that's exciting for us local Zurich people is the Zurich Zoo has 2 new members. Beginning of October, 2 zebras were born to the zoo. Jamie, maybe you have a little bit more information. I heard there it's a very rare type of zebra that was born.
I don't have a lot more information. I just thought it would be some cute and lighthearted news because every other piece of news is much less lighthearted than this. Sure. But we're very proud of the zoo we have here in Zurich. I always recommend it if people come visit us. It's a very nicely done zoo. And they put a lot of effort into like breeding animals that are on like the endangered list, yes. And those 2 baby zebras and a third one is being expected. It's just something lighthearted.
I
get
love
started.
Yeah.
Well, perfect. With that, let's jump into the meat of this episode. So Arielle, if you could please introduce yourself, tell us a little bit more about what you do at Connected Financial Planning, and give us a bit of your experience and background.
Yeah, thank you so much for having me here, Jess and Jamie. It's been such a pleasure to get to know you and your team and really admire all the work that you guys are doing in your practice. And it's such an honor to be here. So my name is Arielle Tucker, and I'm a certified financial planner and IRS enrolled agent. And I run and own and operate Connected Financial Planning. And I established Connected Financial Planning because I really found this gap in the market between the intersection of U.S. tax compliance and also kind of the wealth management piece, right? So if you're just just doing US tax compliance, it's always backward looking. Where as planners, as you know, we love to think forward, right? And if you're just doing investment management, you're kind of telling your clients, make sure you check everything we're doing with your US tax person. And so I wanted to figure out, how do US expats who are globally mobile, who are building their life and their wealth abroad, thinking about retirement abroad, how do they kind of navigate those two complexities and do it together and really create this, I don't know, kind of like the 10,000 foot view of both of those aspects and all the other things that fall into that, right? Where are your kids going to college? Is that in the US? Financially, that looks very different than if your kids are going to school in Europe, right? So thinking about all those types of things, estate planning considerations when you're navigating two jurisdictions or maybe even more jurisdictions, right? All of those things need to be considered for families. And I think there's a lot of private family offices are happy to do that at the $100 million level. How do we make this scalable and actionable for, emerging wealth families? And that's kind of where I live. Separately, I also host a podcast. It's called Passport to Wealth. And that is really our education output, right? For aspiring and current US expats, right? How do you navigate US tax obligations abroad? How do you think about relocation abroad and visa issues, parenting abroad, right? There's so many issues. And what I find, and Jess, I think you can, appreciate this as another fellow American abroad, a lot of the things that Americans abroad have to think about are not logical, right? It's just like the rules do not make sense. And so as you navigate life as a logical person and you're building your life and your wealth and your career outside of the US, you're just assuming that the rules make sense. And unfortunately, they don't. And so the podcast is really our educational platform so that people can start to hear some common themes and issues so that they know when to raise their hand and say, ooh, I'm going to need help because that's an issue that I potentially am facing. And we want to make sure people get help before they end up in kind of a compliance nightmare, which is what I've seen from, starting my career in tax. So yeah, that's basically me in a nutshell.
That's fantastic. It's great to hear, Jamie.
Can I ask something?
Yeah.
And maybe this is clear for Americans, but it's not for me. What is an IRS enrolled agent?
Yeah, so you've probably heard of CPAs. An IRS enrolled agent is basically an expert in just taxation, so personal and corporate taxation. So I can represent taxpayers in front of the IRS. I can sign tax returns like a CPA, but like a CPA can go and do corporate audits. I can't do that, and I don't really want to do that.
Okay, thanks for clarifying.
No, perfect. Today we're talking more about, citizen renunciation, what that process is. Before we got on here, you were talking about how you've been seeing kind of an uptick in that, especially in your world and how you're working. I guess to kind of lead off, who are these typical clients who are looking or are at that stage of renouncing their citizenship? What are their typical kind of profiles? What's their backgrounds? Are they Americans who've left the U.S.? Were they born abroad? Who are these kind of people?
I almost think of it as like three separate categories, and that's kind of what I've seen kind of in my practice in the tax world over the last 15 years. And we have seen a massive uptick in interest and kind of starting to think about the expatriation process, because it's not something that you do overnight. It's not like I wake up and now I've expatriated, right? It's not just a simple form. So we'll talk a little bit about the process, but thinking through who I'm actually seeing. So the first category I would think about is, and this is the category that I've been seeing for years, they have left the US potentially years, if not decades ago. They have built their entire life abroad. Their family in the US is potentially no longer. They don't have family ties in the US. They likely married a non-US person. Their kids identify more in the resident country that they live in than as US citizens. And they're kind of looking down and they're like, wow, every year I am filing a US tax return. I'm potentially paying additional tax to the US. And I'm looking at this kind of expatriation threshold of $2 million. I'm looking at my net worth increase. I am so sick of being part of the US system. I have another passport and I'd like to leave the US. So we see a lot of those types of cases. The other case that we see a lot of times is younger expatriates who were potentially born with multiple citizenships, and they're building their life completely out of the US. Oftentimes those are very globally mobile families, so they don't have those strong family ties. They already have a very strong passport, so they're not looking at the US passport as a way to like gain entry into the US system. They're just kind of saying, you know what, I don't even want to deal with this. I just want to exit the US system. And then where I've seen an increase in interest in my own personal practice is individuals who left Europe maybe 20, 30, 40 years ago, and they've built their life and their wealth actually in the US, and they became US green card holders or US citizens. And now as they look to retirement and they're seeing what's going on in the US, they feel like they don't know who the US is anymore. All of their family is still abroad, and they don't really want to continue to file US tax returns and really have to deal with those complexities once they leave the US, and now they're subject to other jurisdiction taxation. And so that's where I've seen an uptick in our practice, especially that group of leaving the US.
And would you say those are kind of the most common reasons? Like, are there specific reasons that you're really seeing other than we don't want to deal with the, like, I don't want to have to report anymore, I'm tired of reporting? Are those kind of the bigger reasons, or, you know, does it all lay on the tax and reporting side of things, or is there any other kind of reason that you could
so the theme is the same: simplicity. How do I simplify my financial life as I build a life abroad, right? And if you are looking at your life and you're like, I have no family in the US, and again, I have a strong Swiss or European passport where I have a right to go and be in the US and visit and travel and see, you know, old friends or whatever, why do I still have this US passport? Because I essentially, and I'm wearing handcuffs financially, right? I have to play by completely different rules than all of my friends or relatives or neighbors in this other foreign country. And so as a US person, you're automatically in an unequal footing when you're abroad, right? Because you have to always be thinking about what are the rules in the US? Is the US going to allow you to contribute to your foreign pension plan? How are they going to tax that? Is it going to be taxed punitively, right? Can you just go open a local bank account easily? Okay, maybe you can open up a bank account, but maybe you're going to pay a premium because your bank has to have additional FATCA reporting on your case, right? Are you going to be able to get a mortgage? Maybe you're going to get a mortgage, but you're probably going to pay a premium on that mortgage, right? So then so many ways and areas, US citizens end up wearing these handcuffs. And it's not just the reporting, because even if we look at high tax countries, right? Switzerland, I consider like more of a low tax country. A lot of Swiss expats, US expats living in Switzerland actually have to pay additional US tax. But then you go and you look at, you know, Germany or France or Italy, where tax rates are higher. And again, we still have these mismatches of tax law. And so if you have significant wealth, that just kind of increases the potential exposure for double taxation.
Yeah, absolutely. And I think that's, you know, one of the things that I've seen when I've run into some of these cases, or people considering that, you know, whether they built their life in the States and are looking to move back, you know, I mean, especially in that case, or Americans looking to expatriate, at least to retire, they've played by the rules, right? They've done everything right. They've filled their IRA. They've done well, diversifying between a traditional and a Roth. They've built good wealth. And now they move to a tax jurisdiction that's going to see that as regular income, right? Because the U.S., like you said, you try to think logically, like, I paid my dues, I put my pension in the right place, my retirement assets, and now you're going to be hit by one system or the other. Is that something that you think can be mitigated with good planning, or is that, you know, something that's just people are running into and having that headache?
Yeah, I mean, it's definitely a headache, and it's always a headache. One group I just want to briefly mention is the Tax Fairness for Americans Abroad.
Yeah.
They've been doing a lot of work and advocacy in this area. And so if your listeners are like trying to figure out if they can learn more, that is a group I think that you should go and look into. But yes, with good planning, we can mitigate a lot. But what I find often is too often Americans will kind of pick up and move and then call me or call you.
Yeah.
And at that point, you've established foreign residence, and it's really tricky to go back and undo. Like, we can't change the dates that you moved to that country. We always have to look at the facts and circumstances. And good planning takes time. And even with good planning, there's still the exposure for double taxation. And sometimes it's not even really double taxation, it's different taxation, right?
Yeah.
So US expats will always pay the highest tax rate, right? And that's really the issue.
Yeah, I think that's really good. And going back to kind of the renunciation, what does that process look like? How does it really work? And what are some things that, people should kind of be expecting along that process?
So I think it's important to think about this process in it has two parts, right? And so you have the process where you need to go and you need to make an appointment with the embassy or the consulate, and you have to have a formal interview. If you're a U.S. Citizen, you have to go through a formal interview. You have to, prepare documentation. You have to do a formal oath of renunciation, right? And have that all signed off. And then you take that form and then you submit it with the State Department, and you get back a form with an official certificate of loss of nationality, right? And so you would then use that form to prove to your bank or whoever that you are no longer a U.S. citizen. And so the same restrictions that they had placed on your foreign accounts can be lifted. So that's one side of the process. And that process, depending on which consulate or embassy that you're looking at, depending on if we're in a government shutdown and those, government organizations are even operational, that can take a couple of months. You can always request for a last minute appointment or a cancellation. I had one client who had less than a month wait to get their appointment, right? So that's one aspect of it. The second aspect is the tax aspect. And so that's really important. So if you go through the formal oath of renunciation and filing everything, but you don't take care of the tax side, you could be a U.S. citizen, or you could no longer be a U.S. citizen who continues to have U.S. tax obligations, right? And so it's really important that you think about this in two parts. So then we have the tax side, and we have to file a final tax return. And in that final tax return, we include a form 8854 that basically lets the IRS know that you have given up your U.S. citizenship. And so the important thing here then becomes determining if you are a covered expatriate and therefore subject to what we call an exit tax. And this is a often unpleasant surprise for many U.S. expats who start to think about expatriation. They don't understand why there is an exit tax. Because mind you, these U.S. expats have been paying taxes to the U.S. the entire time that they've been abroad. They have been compliant and oftentimes. And so now, to be able to leave the system, you have all these fees. And also one thing to note, as part of going through the renunciation through the consulate, and there's also an administrative fee. And that fee right now, I think, is around $2,300. There's talk about reducing that fee at some point, but that's the administrative fee. So there's that fee that you have to pay. And now we have the exit tax calculation. So first, we really have to determine, are you a covered expatriate? And there we generally have three tests. So the first test is my net worth above $2 million? Now, that sounds like a lot of money, but it's actually not when you start to really consider your worldwide assets. So it's not just U.S. assets, it's all of your assets. And one thing that I think is especially important for U.S. expats abroad to consider right now is, what is the currency implications of your U.S. assets, right? The Swiss franc has appreciated 12%, right, roughly, this year against the dollar. Guess what? If you own a property in Zurich or, in Switzerland, the value of your property on paper converted back to US dollar has also appreciated. Your Swiss pension has also appreciated, right? And so we have to really look at all of your global assets and convert those back into US dollars. And when we start to talk about $2 million, it's not that much money, especially for a US expat who's built their wealth in Switzerland or in Europe, right? So that's the first test. The second test is, have I had an average tax liability of over roughly, and this is indexed for inflation every year, but it's roughly about $200,000. Have I had average U.S. tax liability of over $200,000 over the last 5 years. Now, that's not how much income you've earned. It's not $200,000 that I've earned. It's your actual tax liability, right? And oftentimes that's reduced by foreign tax credits and different things to look about. So that's thinking about, are you making $600,000, $700,000? What is your tax liability going to be? Did you hit that? So you could be someone with only $1 million net worth, but you have a high income, therefore high tax liability, and now you've also triggered it. And then the final test is, have I been compliant with my U.S. tax filings over the last 5 years, right? And so this is a really important consideration because oftentimes, especially when we're talking with long-term U.S. expats, people who moved away 30 years ago, they just, they moved away as students, they started jobs, they've built companies, and they never thought about U.S. tax obligations. It was just kind of like white noise to them. And so we've had all these different programs that the IRS has launched to help bring people into compliance. I am still meeting people today who did not know that they had to file their tax return. And if you think about someone who's fully integrated into like their local culture, or maybe they were born in the US and moved back with parents and family who are none of whom are in the US system, that's like a very believable thing, right? So you have to almost go back, file the 5 years of tax returns so that you can then go through the formal expatriation process.
Yeah.
And it has to be one of those three. It doesn't have to be all of them. Like
no, just one.
Just one of those
yes.
three would trigger the exit tax.
Yes. And another thing to note is if you go through the formal expatriation process, right, we paid the fee, we get our certificate of loss of nationality, and then we go and we file our final tax return, and we don't include Form 8854 showing that we are not a covered expatriate. Even if the answer is no to all three, now the U.S. still considers you a covered expatriate because you haven't gone through the process like in the proper procedure.
And I assume to renounce your citizenship, you do need another citizenship. Like,
yes.
You need
yes.
to, like, maybe just to make that point
yes.
also, right? You need the passport of some other nation in order for you to give up your U.S. passport, because you cannot have no passport at all.
You absolutely. You definitely have to have another passport. Otherwise, you become the guy in the airport.
Yeah, exactly. Yes.
Become a stateless person.
Yes,
essentially.
But that will be
that's another whole nightmare that you'd have to live.
Yes.
Yeah. No,
But does the U.S. ask to see a new passport, or like theoretically, could you give up your passport and not have another one?
I don't quote me on this.
Okay,
I don't know the full.
I was just curious. It doesn't matter.
But I do know you do have to have. But I don't know what they do to verify if you have it or not.
I see.
Yeah.
Okay.
Yeah, and I think a lot of that is good to approach. How do I say this? I think Americans, when we were talking about there's Americans who didn't even realize they had to file. I mean, being born abroad is obviously one of them. I mean, I have a daughter, she's born abroad, she has American citizenship. And so I have to raise her up and teach her about that, right? But as you mentioned, there's a lot of people who don't have that. But even for the average American, right? Midwest born, understands the U.S. system, even we don't fully understand what it means to be taxed globally all the time. And so when you move abroad, even for me, when I first moved abroad, I had a cousin who was a CPA, and he just let me know, hey, by the way, you have to be careful about these things. But I had no idea. Had I just moved away, I would have been in the same situation, thinking as a logical person, right? It makes sense. I pay taxes in the country that I'm in, but the U.S. system works differently. And so, for me, yes, okay, as maybe a professional adult, you would be hearing the right voices, professionals who would be telling you that. But it can you can slip through the cracks, right? I mean, it's a huge tax code system in the U.S.
Oh, and it's so complex. And I think it's really important, right, that you find a specialist, right? And so if you're working with, your family CPA from Kansas City, they have no idea about international. They may say, oh, I'll try to figure it out. This stuff is really complex. And, the Form 2555 and the 1116, these are not forms that the average accountant is looking at on a regular basis. And so I always tell people, find specialists, right? Who actually understand the complexity. Don't just, go with someone like who will tell you, I'll figure it out. This is like a little bit more beyond I'll figure it out. And I had a really interesting story. We had a guest on the podcast and she came in, she was referred to us by an accountant. She was like, you have to share the story. She had tried to figure out how to file she's a French business owner who's a US citizen. And she had to file these, foreign entity filings. And so she was trying to work with ChatGPT about, how do I file these forms? And even ChatGPT was like, you really need an expert. So I think it's just important to highlight, like, this stuff is really complicated. And the thing that really kind of breaks my heart in the whole process is you don't even have to have a lot of money for it to, it's just complicated. You can have very complex situations without having a lot of money. And that it becomes, hard to manage for people.
So how much, if you do have to pay an exit tax, how is it calculated or how much is it? I assume it's not a flat fee. It probably is different for every case, right? So what are some like ballpark numbers? Is it a percentage of something or how does it work?
Yeah. So basically it's almost like if you had your entire portfolio sold on the day before you renounced, right? And so if you think about someone who had like $3 million of net worth, we have to look and see, well, what is their US tax basis? So that $2 million threshold is kind of like important because the US will give you a exit tax exclusion. And this is also indexed for inflation, but for 2025, I think it's around $866,000. And that's like the amount that you could fully exclude from exit tax. So it's important that as part of the planning process, you have to go through and you basically have to categorize every type of asset that you have. You don't just lump them all together and then do kind of a lump exclusion. You really have to think through, okay, how much cash do I have? Because if you have $3 million in cash, right, your US tax basis is $3 million. There's no exit tax on that because there's no gain on the sale, right? So we have kind of cash, property. How much has that property appreciated, right? If you've owned that home for 40 years, it's probably appreciated significantly. If you've just bought that property, we probably have the value is probably pretty close to our US tax basis. Then we have to look at your taxable brokerage accounts, right? What is the fair market value the day before you expatriate, and what is your US tax basis, right? And how do we calculate that? And so you have to go through each asset to determine what is my US tax exposure here, and also acknowledging, right, that different assets have different tax rates in the US. So if we think about your taxable brokerage account, for example, we're probably going to have a mix of short-term capital gains and we're going to have a mix of long-term capital gains. And so depending on all the other factors in your situation, right, how much money do you make? Are you already hitting the highest tax brackets, or, are you on the lower side? Your tax rate could be anywhere between 0% and 23.8%, right? And then we think about what would potentially be taxed at ordinary income tax rates, and those would be maybe like qualified retirement accounts. And from a planning perspective, we have to start thinking about, okay, is there the potential to defer some of this taxation? Would that make sense? We start to have to weigh all these different factors. So I would say, like, I have seen people with net worth, over 10 million have almost no tax. And we're working on a case where we have someone with about 4 million and we have tax exposure of about 300,000.
How much?
300,000.
300,000?
Yeah.
So almost 10%.
Yeah. So it's important to really look at each case specifically, but we can talk about the planning opportunity.
I just wanted to say, this sounds like a average regular person can't even calculate it themselves. They need professional help just to know how much they would pay in exit tax.
I do think it's important to obtain professional help and guidance before you're scheduling that appointment at the embassy. Right. And to me, the planning needs to start 1 or 2 years before you're thinking about going to the embassy. That's really important, right? Because we always want to highlight tax planning, not just doing things for pure tax avoidance, right? And so that needs to be, thoughtful and methodical, not rushing to move assets around and, try to just simply avoid tax.
Mm-hmm. Now, are Roth IRAs included in that, or would they be outside of the picture of someone looking at an exit tax?
Oh, good question. I'm trying to think about Roth IRA. Generally, that's outside because from a U.S. tax basis, it's not additional taxable income.
Yeah, you've paid your taxes on that on your principal that you've put in. Okay. Yeah, it was just a question that came up when you were talking about deferred tax accounts of like, I wonder what Roth IRAs fit into that whole picture.
Yeah, great question.
In terms of, I'm not an expert in citizenship renunciation in the U.S., but I've heard that there's like ongoing, so once you've renounced and done your exit tax, that there might be ongoing tax reporting or obligations. Could you kind of touch on that a little bit, or whether it's true, not true, kind of?
It depends on the situation, right? Are you still somehow to be a U.S. connected person, right? So U.S. taxpayers can be more than just U.S. citizens. It could be U.S. connected person. So if you give up your citizenship, but you still have businesses in the U.S., you're still going to have, U.S. filings. You still have rental real estate. We're still going to have U.S. filings. So it generally ends your U.S. tax obligations if you've fully left the U.S. tax system.
Mm-hmm. Yeah.
But again, you have to move out your investments. We really have to make a clean separation.
Yeah. So it can be the case that if you've done the right planning, you've worked with the right professionals, you've kind of taken step by step, that once you've kind of calculated your exit tax, you've planned everything, that there's kind of this end point of, it's not a soft end point of like, okay, you're no longer a citizen, you've kind of paid your exit tax, but we still want you to report for 2 or 3 years of your foreign so that we know there's no other money popping up, right? Like I don't have to keep filing an FBAR as an example for 7 years. So they see all of a sudden, oh, now there's another account.
Yeah. That's why it's very important, again, and regardless really of how much assets, maybe you only have $1 million and you're below, you're not a covered expatriate, but you're still going through the process and you're formally renouncing your U.S. citizenship. I would still be paying for a professional accountant to prepare and sign my tax return to ensure that I am fully in compliance, right? So we've got that final tax year. It can be a little tricky, right? Let's say for the first part of the year, you are technically a U.S. person, so you're filing a standard 1040, and then we have the point of expatriation, and then you're still having to show the U.S. what happened in the second half of the year, and you're doing that on a 1040 NR. So it's a more complex filing that for any year that we have kind of like this partial period in it tied to the U.S. So again, really important. The other thing that we didn't touch on, but I do want to just mention because there are so many U.S. green card holders that go abroad, the exit tax also applies to them. And this
really,
yes,
even if the green card lapses, whatever.
Great question. So this is for long-term U.S. green card holders. So anyone who's held their U.S. green card for more than 8 years. And so that's a really important thing to be thinking about. If you are like leaving the U.S. system or you're trying Europe out and you've gone through and you have a formal extension process, you need to be thinking, when am I going to be hitting this 8 years? What is my net worth going to be at that time? And again, even if your green card expires and you don't go through the tax process to let the IRS know that you've actually officially left the U.S. tax system, you can be holding an expired green card and still have U.S. tax obligations.
That's wild.
That is. Well, but I think it comes back to how she, phrased it, that a lot of these Americans are chained, right? They're handcuffed to the U.S. system. That's how I felt when I first moved out of the U.S. was like, I mean, maybe it's a bad picture, but the old kind of chain to a ball, right? Like as Americans, that chain is around your ankle as long as you have a U.S. passport or a green
card is much less than a passport.
But I stumbled across this, and you can correct me if I'm wrong, but even if let's say you married a U.S. person, you're not U.S. connected at all, there is a way for you to elect to be treated as a U.S. tax person.
Why would you want that?
Yeah,
that could be a really interesting planning opportunity. I mean, that's a whole, we won't go down that tangent, but there are people who elect that treatment. Like imagine you have a U.S. Individual making a ton of money, working abroad. They have a spouse who doesn't work, has no income, no assets, and they're able to file married filing jointly, higher standard deduction, lower tax brackets. It can be an interesting planning opportunity. But I've also seen the case where, the tides change and now we have to officially remove this person, and it's not an election that you can just turn on and off, right? So you want to be really thoughtful about the planning. Again, like none of this stuff like makes sense. Like it's not intuitive. The rules are not intuitive, and so you really need to be taking the time to understand what the rules are. And it's like the rules are always changing, right?
Yeah.
So I think it's pretty intuitive. The question is just always, how can the US government collect as much tax as possible? I'm sorry to be cynical.
From a government mind.
But I mean, that's the logic behind it, no?
Yeah. No, I agree. I mean, look, we're in a capitalist world. We're all capitalists sitting here. And if you have a government running a capitalist world, their goal is also to grow revenue, right? I mean...
Well, I mean, this is philosophical debate where we have different stances on that, but we don't have to go on that.
No.
But...
So I'd say in this process, what are could you highlight, I guess, a few of really like big red flags that Americans who are really seriously considering this, that they should be aware of? Just, I mean, we've already talked about working with a professional. Obviously, that's maybe not necessarily a red flag. I mean, it would be if you're not. But could you highlight some red flags that they really need to pay attention to so they don't click on that minesweeper?
Yeah, I mean, so some of the errors or issues that I see in expatriation. So one is just rushing, right? You're not being thoughtful about what are the planning opportunities. You're just taking this like really emotional decision and trying to rush through it. And I never advise that. I think expatriation is a really important thing to take your time to consider. And I always tell my clients, I think back to COVID, right? When the border shut down and you were not allowed to enter certain countries unless you had a passport, are there family members that you would want to be with, right? And if you don't have a US passport, you may not be able to get to aging parents that want and need you to be with them. That's a really important consideration. Where are your children going to end up? If you're living a very international lifestyle, your kids are in international schools, they're planning on going to US universities, they may end up in the US. And again, you might want to be with them longer than, 3 months, a year, right? So it's really important to consider your individual situation and not just the tax and financial considerations. Another thing that we talked a little bit about before was people just being like, I don't have $2 million. There's no way. But once we start to go through every single asset that you have, a lot of people are like, oh my gosh, I didn't realize my net worth was so high. And again, especially with the weakening dollar, that's just another important point to highlight is you really need to think about, what is my net worth today? If the dollar continues to weaken, what is my net worth going to be if all of my assets are majority outside of the US system? So another consideration. Those are some of I would say those are like the biggest red flags that I see. And again, not engaging with a professional, especially for just the tax filing. Again, your net worth may be below. It's a fairly straightforward case. I still think it's such a big decision. It's such a process. It warrants having a professional having their name sign off that everything was done correctly so that you have that peace of mind for the rest of your life. Okay, I've done what I needed to do and I've officially left the system.
What would you say out of all the people that contact you because they're considering this, how many actually follow through?
Most.
Most?
Yeah, most are following through. So we do a lot of paid consults. So we offer we no longer offer a complimentary consult. So if you just want to pick my brain for 45 minutes, we offer a paid consult for you to do that. And we can talk about that. And I don't really consider you kind of officially hiring us for a full expatriation engagement. Okay. And so for those clients, oftentimes I don't know what they decide to do. We've just had a conversation almost like what we're having today, or what are the considerations? What do you need to be thinking about? What are the rules around expatriation? So that's kind of I see a lot of kind of interest in that regard. When people actually hire us to go through the expatriation analysis, they're giving it up. And one of the things that I've seen this year with the weakening dollar is they are trying to give it up as soon as possible. They don't want their assets to further appreciate in a foreign currency and that the exit tax increases. So they're really thinking, okay, how can we speed up this process?
Yeah, that's very interesting to hear.
Just out of curiosity, it's not too relevant, but I'm just curious. What do you know what is being discussed during this exit interview?
I don't.
What do they ask?
Yeah, I mean, I talked to a client who gave it up earlier this year, and he said it was very, he went to Bern. It was very professional. They just went through the form that he had pre-prepared. He did. He answered all the questions. They signed it. They notarized it, and then he took the form and they mailed it to the State Department. It was. I've talked to different people, and some say it was a quite emotional experience. And then I've talked to other people, and they were just like, it was very businesslike and kind of check, move on.
So it kind of depends, I guess, on which person you get doing conducting the interview.
And I think it also really, it is a huge part of that is the emotional state that you're in as you go through this process. If you are truly mourning your ties to the U.S., you still have strong ties in the U.S., that's going to make it much more emotionally charged than if you were like, I have never lived in this country and I am really sick of paying an average of $2,000 a year just to file a tax return to pay more taxes. So really depends.
Yeah, no, that's very interesting. And I guess kind of on the planning side of things, so a person expatriates, renounces their citizenship. How much effect does that have on who they're working with, right? So let's take the case of WHVP, right? We have a client who decides to expatriate. Should they continue to work with the same professionals that they've been working with? Does it have to, I mean, we're talking about a whole change of life, right? Especially for the people who have lived in the States and they're giving up that connection, I guess. But on the professional side of their network of experts, how does that change that, or are they still able to work with people like us? I mean, yes, they kind of are. I mean, we can work with them, but
I think that what's important, and we've kind of had this conversation with clients before, is that we fully separate you out from the U.S. side of the business, right? And I don't know, do you guys have a Swiss side of the business where it's just Swiss facing?
Yeah, I mean, we're fully licensed by the Swiss Financial Market Authority, so we don't explicitly target Swiss clients, but certainly the few clients that renounce their citizenship, they stay with us because we can also work with someone who's only
I mean, it is separated in the sense of the entity is the same, but in terms of remaining compliant, stuff can't be stored together, stuff like that. On the compliance side, absolutely.
So I think that's the important thing. And so many of what I see in expatriation cases, they want to know the U.S. is not going to be seeing their stuff anymore. They want to know I am fully out. I'm not going to have potential estate tax issues down the line because I've got all these U.S. assets and I've continued to have U.S. ETFs or whatever. They really want to make that clean break. And so for example, when we talk to clients, they want to go from, the U.S. side of maybe Interactive Brokers to the Irish side, right? And so really showing a clear break. And I really recommend that they do that, right? We really want to show that they've left the U.S. system.
But I mean that I mean, just on the planning side, kind of unrelated before we kind of wrap up slowly, but that means dismantling if you had structures in the U.S. like trusts, I mean, almost kind of totally having to redo your estate planning that you had done if you were living in the U.S., right? This is obviously for the person who born in Switzerland, raised in Switzerland, no real connection to the U.S. But for those people, it's not just a lot on the tax, making sure you're working with the right professionals, but it's how you've structured your entire estate.
Oh, completely. And so I would think about this is why we're not rushing to do anything. And this is a phased approach. So if you're a U.S. person living in the U.S., you have everything set up, optimized for being a U.S. person in the U.S. So the first step of that is going to be, well, if I'm giving up my U.S. citizenship, where am I living? Where am I establishing residency? And now the first baby step one is just going and moving to that country and understanding, okay, how are all my U.S. assets? What is the intersection between this new country and the U.S.? That's kind of baby step number one. And then baby step number, the next step would be okay, if I'm truly giving up my U.S. citizenship, then I need to relook at everything, because we talk about trusts all the time. Americans love trusts. They don't really exist in the same way in any other country. And so we really have to understand, do those things even work for you if you are both a citizen and resident of that country? And I think that's a really important distinction, right, for thinking about treaties and everything, right? Are you a citizen and resident of that country? Because you're likely going to be, regardless of what else exists, you're going to be subject to local law.
Yeah, absolutely. So I guess kind of a final thoughts portion. What would be your top piece of advice for someone who's just now putting their toes in the water? What's I guess your biggest advice? I know you mentioned the organization Taxation for Fairness for Americans Abroad, I think it's called. I follow them as well. I think they're fantastic. But what's kind of the top piece of advice that you give them to help them along and down the right path to getting the answers or starting that process?
Yeah. So again, don't rush. And I'll give you an example of a client we've been working with for the last 2 years. She wanted to leave the US. And I said, baby step number 1, leave the US and give it a full year and make sure you really like living in Switzerland and that you don't want to be back in the US. And there's nothing that you miss in the US. And after that year, let's have a conversation and see like, where are you, right? And really think through. And after a year, she was like, I am never going back. I love my life here and I'm ready for like this next phase of my life. And then we were able to kind of go through. I also think it's really important, like going through this exercise of listing out all of your assets. And what is the US tax basis of all of those assets? And what is the highest potential tax rate in the US on all of those assets if you were suddenly to liquidate everything, which is what the US is basically saying that you did when you renounce. They do the mark-to-market calculation. What is your potential exposure? And that kind of helps you also buy time, right? Like if you can do that calculation, okay, I'm at 1 million this year. Okay, maybe you don't need to rush to give up your US citizenship. And then in a couple of years, okay, I'm at 1.5. And what 1.7, right? You can start to make these really informed decisions about when I'm actually going to give up my US and do I have any other obligations? Has my situation changed at all? And I always think about your backup plan. If you're in a foreign country and that you're only there for your job, are there other companies that can hire you, right? Where would you go? Even if you eventually get citizenship in that country, like, are you really fully prepared to only be in that country for the rest of your life? Can you financially do that, right? So really think through like all the spectrum of possibilities and be prepared to answer hard questions.
Arielle, thank you so much for joining us. Jamie as well. That'll be us for today.
Yeah, maybe we can, if I may
True.
jump in,
Yes. Yeah,
give
true.
you a quick chance to let our audience know where they can reach you in case they would like to hire you for a paid consult. And also we are going to link your podcast and maybe also the tax group in the show notes so people can continue their education.
Great. Thank you so much. So my firm is Connected Financial Planning, and my podcast is Passport to Wealth, and you can find that passporttowealth.com. We're also on YouTube and Instagram. We're on all the places. And I am most active on LinkedIn. I love basically writing and discussing U.S. expat tax issues and financial planning issues. So feel free to follow me, Arielle Tucker, on LinkedIn.
Perfect. Will do.
Thank you so much.
Thank you so much.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.